Hey, Bowtie Nation, Joseph Hogue here with you on another live Sunday live stream. Love doing these, just the kind of that face-to-face feel that we don't get in our regular videos. So thank you for joining me. We're here every Sunday, 2 p.m. Eastern, 10 a.m. Pacific time, or wherever you're at in the world there in the Bowtie Nation. Grab your favorite adult beverage or whatever you're drinking right now, and we're going to get into it. Again, love being here with you every weekend, being able to answer your questions, talk about kind of a theme or a topic of the week, and really see what's going on with the market. And today we've got a great video planned for you. Stocks that I would love to buy and hold forever. Some of the biggest theme over the next couple of decades, and we've already got a couple of guesses here. Tesla is number one. No, actually, Tesla is not even in this group. I didn't include electric vehicles in the group because I don't think it's a surprise. Obviously, everybody's watching Tesla, everybody's watching Bitcoin, but what I want to show you today are four themes, four topics, overall universal forces that are going to be driving the stocks in those segments for the next 10 or 20 years. And these are the stocks that you want to be in to really ride that up. It's going to be like the electric vehicle stocks of the future. So I'm really happy, really excited to bring you that. But stocks are undeniably expensive, right? I'm going to be showing you the price to sales ratios of the market and each of these stocks. And it's just hard for a value investor like myself. And I know a lot of you out there are looking at the valuations on these stocks and saying, I would love to be in these stocks, but oh my God, can I take the 20 or 30% correction or crash when it comes along and be able to stay in those for the long term. So, I'm going to put together that list of the 10 stocks, the buy and hold stocks that I want to buy, and I'm looking for any kind of a correction in the market to pick up more shares of those. A few of those I already own actually, and we'll see if we get the chance. Again, and I'm also going to share two strategies. One that's going to involve, maybe buying a little bit now, maybe getting your exposure into these stocks, buy and hold stocks of the future now, and then the other strategy, waiting for that correction and how to look for that. So I want to get started here. Thank you. I see everybody there in the chat, and it's good to see you. Let me know where you're coming from in the Bowtie Nation there, and we will get started. First, though, I gotta do a real quick call to action on the daily Bowtie. This is our daily newsletter, market updates. We cover the market trends, the hottest stocks, the sectors in each, for every day, and it's really been amazing. We just started this last week, and already over 5,000 of you Bowtie citizens out there are signed up and in this. I left a link in the chat there. I'll leave a link in the video description below and in the comments. Check it out. It's free, no obligation. It's something I've been wanting to do for a long time, is send out these daily market updates with just everything that happened in the day. We send it out at 9 p.m. Every night before the market opens, so it gives you lots of time to plan your next day, your next trading day around that news. And again, it's totally free. So check out that link, go sign up, and I guarantee you'll like it. We've got some great insights into those trends, the stocks, and all the stock market news happening each and every day. But I want to get started because, like I said, I'm excited about sharing those 10 stocks with you. A little housekeeping. Next week, we've got some crypto-related stocks, cryptocurrency stocks. Obviously, cryptocurrency, Bitcoin, the blockchain, it's the big news right now, with blockchain hitting like 42,000 just last week. And, I wanted to get you a video where you could take advantage of that ride, ride the blockchain, ride Bitcoin higher, but without maybe some of the risks of just directly investing in Bitcoin. So I'm going to share a strategy in that video tomorrow where, maybe you put a third of that blockchain crypto money in directly in Bitcoin or some of the other coins. And then I'm going to share some other stocks for you and some funds where you can get a little bit different exposure still to the blockchain, but not necessarily quite as volatile as Bitcoin itself. So that's coming to you tomorrow. Friday, short-term investments for 2021, sharing all my favorite investments for this year specifically. And these aren't long-term buy and hold kind of investments. These are investments where you want to make a high double or triple digit return in this year. And these are the investments I think you can do that with. So I see a lot of people just already making nice. Jess says he's already making $13 a month on his daily dividend portfolio. Had a couple of videos out a few months ago on how to collect daily dividends for your portfolios. Shared about 56 stocks actually for a portfolio that actually paid you every single day. So it's great to hear you're putting that together. See a lot of you out in the Bowtie Nation there from Pennsylvania, Virginia, Mongolia, California. Great to see you here. And let's get started. The video isn't going to be really about a crash or a correction because we've already covered that in a lot of other videos. This is just a video that I wanted to share with you for a long time. Just long-term stocks that I really want to buy if they weren't so darn expensive, right? And I'm going to share a chart with you, and we'll show this again when we get into the stocks. But this is the price to sales ratio of the S&P 500, right? And it's a little hard to see the axis here, but the bottom axis there is time. So we've got 20 all the way back to about year 2000 to 2020. And price to sales of the market itself right now is 2.77 times, almost 2.8 times, which obviously much higher than it has been any time over the past two decades and even further back then. So definitely kind of an overvalued market, even with some of the stimulus and the lower rates that we're looking at. And I'm not necessarily saying that that's going to lead to a correction or a crash or anything like that, because the market doesn't crash. The bull market doesn't die on prices alone. Okay, but stocks don't fall just because they're expensive. They need a catalyst to really drive down that investor sentiment that's driving the market. So look for some of the videos that we've talked about in the past on that. This one is really what I want you to do, or I want you to be ready for when that correction or if that crash comes, okay? These are a lot of the stocks, like I said, the four themes that I think are just going to be driving the economy, driving that next evolution in the market over the next 10 or 20 years. These are the things like the internet boom, okay, that we've seen in the last 20 years. Some of these other big universal forces like the aging demographics, and the how they've driven stocks in those segments. Well, these are the next themes to follow. I think the next themes that are really going to drive the stocks in those groups, and I think you should be ready. I'm getting ready for when the market does give me an opportunity to pick up a few of these. And there's going to be two ways to look at this, really. One is just to put these on your radar. We've got 10 great stocks here, great companies that are really leaders in these themes, in the space. So put them on your radar for when we do get a correction, because one happens every single year. Okay, I actually saw some research by, I believe it was Bank of America last week and Schwab. Over the past 20 years, there has been a correction that's 10% or more, a drop of 10% or more on the market, at least 2 out of every 3 years over the past 20 years. And even going back to 1976, it's been almost once a year, but usually about every two out of every 3 years, we get that kind of a correction. So even though 2021 looks great for the economic growth, it's definitely going to be an economic rebound year. We've got trillions of dollars flooding into the economy from that stimulus. So overall, the market looks very good for this year. But there's always going to be something that hits that investor sentiment. Okay, because over the long term, the market, stock prices, all that is driven by earnings, driven by the economy. That's over the long term. But over the short term, 1 year or less, it's 100% investor sentiment. Okay, so you could have a great economy, a great market outlook, and still, something comes along to hit that investor sentiment, and that's going to drive stocks lower. So be ready for that. That's one strategy to look at this, or one way to look at these stocks. The other one is just to buy a couple of shares of each now and just plan on investing every single month. And honestly, I kind of like this strategy a little bit better. Actually, this is probably what I'm going to be doing with a lot of these stocks right now anyway. I've got a lot of my covered call positions, so basically selling calls against my own stocks as a little bit of a downside hedge. I've got a lot of those coming off on January 15th, right, when those long-term options expirations or long-term options expire. So I'll have a lot of money coming into my account through those. And I got a lot of cash on the sidelines. Got about 30% of my wealth in cash right now. So I'll probably go into a lot of these stocks with this strategy. And that's, again, just buy a couple of shares now and plan on investing every single month. Okay, just put more money in every single month. And that long-term investing strategy is so important and so powerful because you get prices at the highs and the lows. Even if we do get a big correction coming, then by putting money into these every single month, yeah, you're going to be buying at the high right now, but you're also going to be buying at the lows when they come along. Okay, so maybe keep a little bit of cash on the sidelines, a little bit of dry powder there, but you start investing in these stocks. So, if they do keep on going up, then you'll benefit from that. If they come down, you're going to benefit from that too. So that's the other strategy. And again, these are long-term themes, undeniable universal forces that are just changing our world over the next 10 to 20 years. That's really how you invest. Okay. We're going to start with these 4 universal themes, and then within each, we look for the stocks that are really driving in that theme, are really going to benefit from that theme. And it makes it so much easier to invest because once you identify that theme that's really driving the earnings in every company within it, then it narrows your universe of stocks to invest in, right? You don't have to start with screening the whole universe of 5,000 stocks tradable on the U.S. exchanges. You can look at this theme and say, okay, for example, digitization, the blockchain. What are the companies involved in that theme? What are the companies that are going to advance over the next 10 or 20 years as that advances? And you've only got maybe a universe of 100 companies really in that. So you start with a much smaller universe. And, you don't have to pick the very best one. In fact, again, that theme, the evolution of that theme is going to drive all the stocks within it. Okay, so even if you're picking, maybe one out of the top 5 in there, the top 5 leaders, you're going to do well. You're going to do well on this theme, and then you're going to do well picking those specific stocks as well. So we're going to go over and look at each of those. And again, we're going to be using the price to sales for each just kind of as a reference. We looked at the market just a little bit ago, and I'll switch to that screen again. The price to sales ratio for the market is 2.8%, or now 2.8 times sales on the S&P 500. And we're going to look at some of these stocks, obviously much, much higher, 5, 6, even 10 times price to sales. So multi-decade highs as far as those valuations. We're going to kind of compare those. So let's get started here with our first theme, and then we'll have a question and answer at the end as always. Appreciate all the questions you guys have. Make sure you ask them again towards the end of the video there, and make sure you use question marks so I can see what it is. So first, we're going to start off with kind of digitization and the drive of 5G, okay? And really 2 separate themes here, but I included them because a lot of the same stocks are going to be included in those. Okay, so first you've got blockchain and digitization. Now this is separate from payments and Bitcoin and the coins and cryptocurrencies, right? This is the use of blockchain and the digitization of businesses. It's a huge trend that's going to be developing over the next 10 or 20 years, especially in a couple of industries or a couple of sectors like health and financials. Okay, these 2 sectors are going to be completely transformed by the blockchain, by use of the blockchain and digitization. And any company that can be involved in that and can be a leader in that and a first mover, like some of the ones we'll talk about today, are really going to benefit. Okay. The other theme is really the 5G and the Internet of Things experience, right? 5G, the speeds are going to be upwards of 100 times faster than what we've seen with 4G. It's going to allow, and just that speed and the fact that you can have, I think it's upwards of 1,000 devices connected onto a network, as opposed to 4G, which you can only get maybe 15, 20 devices on a single network right now. And that's limits really that bandwidth. It has to do with a lot of the bandwidth congestion that we get now. When you get 5G and you get all those devices on a single network, that enables a lot of the AR, the AI stuff that we've been waiting for. That enables the smart cities, the smart driving, those autonomous vehicles, because they can all talk to each other automatically, because there's all the devices are on the same network. The bandwidth speed is so much faster. So you really enable a lot of the other tech evolutions that we've been talking about over the past few years. So really in that 5G and IoT thing. And to start this out, I want to start out with the stocks there, and we'll just flip our screen. And the first is going to be here, Salesforce, Salesforce.com. A leader in a lot of its different business segments. And this one that's actually going to be in two of the themes here. This is one of my favorite long-term stocks. Okay. And for the blockchain digitization, it's because CEO Mark Benioff has been a big believer in Bitcoin, in the blockchain for a long time. And they've already kind of started building out their tools for businesses to be able to adopt that blockchain technology. Okay, so CRM, their ticker CRM, Salesforce, they've really built out, in the cloud and on their software, their apps, the ability for companies to use the blockchain to really evolve the business model. So I think it's going to do really well, when companies do start adopting that. Okay, but as you see, price to sales of 10 times sales. Okay, and that's even over the last year, it's traded for as low as 8 times sales. So this is one of those though that, and a lot of these are going to be kind of like Amazon, right? I've been waiting for Amazon to be value for decades. Okay, Amazon is never going to be a value stock, and I don't think CRM is ever going to be a value stock either. And what you got to do with a lot of these stocks is you got to realize that yes, you can get a better price at it. We can get a correction in the market of maybe 10%, 15%, bring stocks like Salesforce.com down to maybe 9 or even that 8 times sales. Okay, traded at 8 times price to sales ratio in April, right around when the worst of the sell-off was in the market, and that's actually a great time to buy Salesforce. Even though the market, if we look at that price to sales chart for the market, so it looks like back in when the worst came, it was at about 1.8 times. So about 1.8 times price to sales ratio on the market when we had that March sell-off. And then we see in the previous recession, it was down to about 0.8 times, which was obviously turned out to be an amazing time to buy stocks. So you look at stocks like Salesforce, like Amazon, and they're never going to get down to 2 or 3 or even 4 times sales as far as valuation. You can't wait for that kind of valuation, like you would with other value stocks, with bank stocks like Wells Fargo and that kind of thing. You got to understand, okay, for CRM, for Amazon, for a lot of these stocks we're going to be talking about, that 8 times price to sales ratio might be a great entry point. Okay, so I don't want you to think that we're waiting around forever for these to be value stocks. You got to be value stocks in their own, on their own history. So definitely one I would be looking at as far as digitization and the blockchain. Next one here, we're going to do kind of a twofer. It's going to be AMD, so Advanced Micro Devices, ticker AMD, and NVDA, that's ticker NVDA. And both of these are kind of on that crypto theme, plus the IoT demand for semiconductor chips as well, right? You've got for that crypto demand, the miners, you need those GPUs, right? The graphics processing units, that the graphics cards that really run all the mining software and really run the computing intensive operations like AI and that mining. And NVIDIA is the leader in GPUs. But I like AMD a little bit better just because it's got the CPU business as well, those central processing units that go into pretty much everything we use electronically. So it's a little bit more diversified. AMD also has a prefab, a semiconductor fabrication partnership with Global Foundries, which was actually spun off from the company not too long ago. And part of the reason why I like that so much also is because we are seeing a massive shortage for semiconductor chips. Okay, this is a theme that we've been talking about in our the Daily Bowtie, in that newsletter for the past couple of weeks. We've been talking about it in a few of the videos. Really, right now, there is, just because of the COVID closures in a lot of these semiconductor plants around the world, but two, just because the huge demand from these IoT devices, from 5G, from all these electronics coming out, there is a semiconductor shortage, and especially in the 200 millimeter wafer size. Okay, you've got a 200 millimeter, the 300 millimeter, and the 450 are actually newer technology for those wafer sizes. But what happened is a lot of the the equipment, all right, the hardware providers switched to using those 300 and the 450 millimeter wafer sizes in semiconductors. But and so, because they switched, because the end users switched, the hardware users switched, then the semiconductor makers switched as well. They switched a lot of their production to that new 300 and 450 millimeter size. Well, the thing is, a lot of these Internet of Things devices, these connected devices that they're coming out with, they're still using the plans. They were planned and designed up for 200 millimeter wafer size. So they're still using that older legacy wafer size. And there are just much fewer fabrication plants and semi makers that still have that capacity, still have that production in that size. So we're seeing a huge semiconductor shortage across all the different sizes, but especially in that. So anytime you can find a semiconductor maker or a prefab maker that makes that size, even better. And that's part of the reason why I like AMD. They do have, through Global Foundries, they do have that 200 millimeter wafer size production, as well as all these others, GPUs, the CPUs, and I think it's really going to do well. Even though you can see it's really boomed here over the last year. Everyone in semiconductors has. Price to sales for AMD here is 12.7 times. Okay, they're trading for a price of 12.7 times their sales. You can see here back in March, trading at 8 times. Okay, so 12.8 divided by 8. They're trading 60% more expensive than just they were back in March. And even back then, 8 times, or 7.5 times sales. That wasn't cheap by any value standards, right? But it was cheap for the stock. So again, I want you to look at this and say, okay, you know what? I don't want to wait until AMD gets down to 4 times sales or 2 times sales where the market is to be able to take a position. If it gets down to 8 times sales, I would be loading up the truck with shares of AMD. But even at this point, like I said, maybe you put on shares, you put on that plan to do each month to buy a little bit more. Another stock here in that theme, in that 5G and IoT theme, is Qualcomm. Okay, Qualcomm's the leader in chips. Okay, semiconductors. Right now they're really built towards mobile, but they're also being a leader in those IoT chips. Right. So this is another one in that theme. I think you can do really well over the next couple of decades. But another one, price to sales of 7.6 times. It was just 3.3 times back in March, and even before the market sell-off, it was 4.5 times. So it looks like, a little bit more normal pricing for Qualcomm might be around 4.5, maybe as high as 5 times price to sales ratio. Right now it's 7.6, so almost 8. So quite a bit higher, about 30-40% higher than the longer term average on that. One more here in that whole theme, and it's going to be Teladoc Health. And how this plays into it is really that digitization, that use of the blockchain in healthcare. I think healthcare is going to be one of the first sectors to really utilize the blockchain and use that technology for efficiency and really to change its business model. And Teladoc is already there. Okay, so like we saw in Salesforce.com, they're a first mover in what's going to be the technology over the next 10 or 20 years. It's really going to shape the changes that we're going to see in this sector. So that's definitely one I'm watching as well. We can look at the statistics here. Trading for, this one actually isn't trading too expensively relative to this year's price to sales. It's trading about double where it was last year as far as price to sales, trading for about 20 times on a price to sales basis. And you can see it's actually down a little bit. It was trading at 22 times here in June and September, but back in December of last year, it was trading at just 11 times sales. Okay, so it really gives you an idea of the how expensive these stocks are relative to the market, where we saw it was about 3 times price to sales ratio relative to even some of these other stocks that we saw were maybe around 8 or 10 times sales. Teladoc's trading for 20 times sales here. So that's the first theme, that digitization, the 5G, the IoT, Internet of Things theme. Next, we're going to talk about e-commerce. Okay, and this is probably the oldest of the themes that we'll talk about. Obviously, been around for decades now. But I think that trend has really accelerated this year. Okay, we were doing right around 12% of total retail sales, 14% of total retail sales were online, were through e-commerce at the beginning of this year. And that jumped to 24% of retail sales this year, or last year now, 2020. During the pandemic, people were just forced to go online and make that change in their buying habits. Okay, so not only did you have that long-term trend that was only increasing, that e-commerce percentage of retail sales was going up double digits, 12, 14, 15% each year, versus total retail sales was only growing maybe 3 to 4% each year. So, e-commerce was definitely a trend you wanted to be in anyway. And now with just this massive change that we had last year, I think a lot of people, they were forced to make that change and realized, really how easy it is to use some of these online delivery services to buy your stuff online. And, there's no going back from that. We'll come back down for a little bit from 24% of retail sales as e-commerce, but it's going to be a huge change. It's going to be 18% of total retail sales is going to be e-commerce from here on out, and it's going to grow every year. So you definitely want to be in the in the names that are going to lead in that. And we could talk about a lot of the names here, but it's got to be Amazon. Again, like I said, I have been wanting to jump into Amazon for a long time. I've actually got a couple of shares, so not a whole lot there. But it's one of those stocks where you're always waiting for it to come down. You're always waiting for the sell-off so you can get stocks at a value, at a value price here. And let's just look at the chart of Amazon though, and 5-year chart. So it's the pullbacks have been very few and far between. Okay, September, August 18th. 2000 down to 1500. So it did come down, 25% there. Here in August, it actually came down from about 3,500 down to 3,000. So, you've got a few opportunities in the last 5 years, a couple opportunities really, if you're waiting for that big sell-off. And even if you go further out, just look at that chart. That does not give you a lot of opportunities if you're waiting for that perfect price. And that's why I think that strategy of just buying in and committing to buy every month a little bit more. For shares like Amazon trading at $3,100 a share, you're gonna have to be using a platform that allows those fractional shares, maybe like a M1 Finance. Or I think another one, I think Fidelity allows fractional shares. So basically you can invest any amount you want. You buy a fractional share of Amazon and you just add to it every single month, okay? Because, Amazon Jeff Bezos is going to own everything, okay? He's going to own the world someday. And that's only partly hyperbole, okay? I'm only talking, only a little bit of a joke there, okay? He's just had the amazing ability to invest and add to the company over decades. Just last week it was reported that Amazon was buying jets, from a lot of the airliners, and obviously at rock bottom prices. It is an amazing time to be buying jets to build out that logistics empire. Okay, so not only is Bezos and company there, not only is Amazon going to have a lock on e-commerce, but it's also going to have a lock on how that e-commerce gets to your door. Okay, he's buying the trucks, he's buying the airlines, the planes to move it around. The healthcare venture with Warren Buffett and Jamie Dimon didn't do so well. That one folded up in the last couple of weeks here. So, maybe not so much in healthcare, but Amazon now has, they have the e-commerce, they're going to have the logistics for it. So the transportation, they're going to have, the supermarkets. So they've got with Whole Foods and everything they're building out on that, as well as a lot of the other stuff that you just don't see with Amazon. A lot of the stuff that happens in the back office kind of operations that you don't see and is really going to drive this one higher. So really like Amazon. Going to be picking up a few more shares, and again, just waiting for that one to get a little bit cheaper, putting it on my list of long-term buy and holds. Okay, the next theme we're talking about, cybersecurity, right? And cybersecurity is the new modern warfare, okay, and it's only going to get more pervasive. And we're not just talking about the lower level hacking events, that kind of thing, but we're talking about state-sponsored acts here. We just had that massive breach at SolarWinds a month or so ago that hit all the government offices and that kind of thing. And really, the reason is, there are countries that like Iran, perfect example, can't go toe to toe with with the U.S. or a lot of the Western powers in a traditional warfare setting. They don't want to declare war, but they also have to have answers for some of the events that happen. They also want to conduct their own operations and stuff. Well, they use cyber. All these state actors, North Korea, Iran, all these belligerent actors, they're turning to cybersecurity or cyber hacking because the West and the developed nations, and really everyone, they don't have a defined game plan, I guess we'll call it, for how to address it. There are no rules of engagement for cybersecurity and that part of warfare yet. Okay, somebody in the past, somebody invaded your territory and you knew it was war. Okay, somebody dropped a bomb, it was war. Okay, that was a clear, definitive action where a declaration of war could be set out, and you knew where you stood. You knew who the actors were and that kind of thing. With cybersecurity, people they just don't have that set up yet. So it is an easier way to conduct modern warfare by some of these nation states that don't have necessarily the army or the power to do it in that traditional sense. So you've got that, and that's just on a massive scale, right? But you've also got all the little hackers and all that's happening as well. So definitely something you need to be benefiting from over the long run, over this next 10 or 20 years. And for this, you can go to names like Crowdstrike. Crowdstrike's a good one. One we've been in the Bowtie Nation actually for about the last year. We recommended Crowdstrike back in October. It was back in October of 2019, October through about March. Here I was recommending Crowdstrike at around $50 a share. All you in the Bowtie Nation, long-term members of the Bowtie Nation, you're going to remember that. And now look, it's 200, so it's basically 400% or 300% return here for shares of Zscaler. And why I like Zscaler and some of the newer cybersecurity firms, there's some value still in the legacy providers, maybe like Palo Alto Networks, and they are slowly adopting their technology and evolving their technology into the cloud services and some of that newer cybersecurity protection. But really, Zscaler is what I noticed was they're really that next level, right? They started on that new evolution in the technology with the cloud service, software as a service, cybersecurity platform. So they took a lot of that business away from the legacy providers like your Palo Alto Networks or FireEye. These legacy cybersecurity providers that were still built on the hardware and some of those legacy services. So, I think there is some value in some of those legacy providers like the FireEye, like the Palo Alto Networks. You could probably put some shares in your portfolio of those because, again, they're going to be evolving their own services and catching up with some of these newer upstarts. But, you've got to look at names like Crowdstrike and Zscaler as well, because those are, they really took a lot of market share here in the last year with those new services. But again, 52 times on a price to sales basis. That is just ridiculous. And I don't know any growth that really justifies that. Even a price to earnings to growth ratio of 10 times. It's just, almost insane valuation. You see just back in January of this last year of 2020, it was traded for 21 times on a price to sales basis. So, more than double on that price to sales basis. And basically it's all in the stock price. The stock price has just jumped. It's zoomed higher. Sales, they've increased quite a bit as well, but they haven't kept up. And that's why you've got that multiple expansion there. So again, definitely want to be in that longer term theme, because it is a theme that's going to play out over the next 10 or 20 years. And even at these valuations, the Zscaler is still going to be a great investment. Honestly, I've still got shares in my portfolio. I'm not selling even at this valuation, because I know even if they do come down a little bit, then I can pick up more shares for that dollar cost averaging and just ride them higher over the next 10 years. Last thing we'll talk about, and then we'll get into the question and answer section, is remote work. Okay, and obviously this was the big theme of 2020, because so many companies were forced to adopt those remote work procedures, and a lot of them are saying their employees are never going to go back to 100% in the office. Okay, Amazon's already announced, Facebook already announced. I think Twitter, Jack Dorsey announced for Twitter sometime last year that a lot of the employees can choose to just work from home for pretty much all the time. I mean, they might get back into the office one day a week, but it is definitely a remote work environment that we're looking at now. And this is, again, just like the e-commerce, this is a trend that we were seeing play out for the past decade, but it really just got that jump start. It forced companies to adopt some of those procedures and take advantage of that. And it's just gonna increase even at an even faster rate. Again, like I said, when you start talking about 5G, when you get that 5G and that Internet of Things speed out there, then you start enabling things like AR. Things like so augmented reality, virtual reality, where people can just put on a visor and basically they're in the office. Okay, it feels like they're in the office. They can interact and engage like they're in the office. So at that point there's almost no difference, right? A company can buy some of these headsets for their people and completely save all the costs, all the office costs. Saw a super chat there by Larry. Thank you for that, Larry. Longtime listener. That you're a longtime citizen of the Bowtie Nation. That's what I like to say. So thank you for that again. And we're gonna have two stocks here for this for the remote work theme. And the first one, again, Salesforce, ticker CRM. Okay, the CRM, Salesforce, is the leader in cloud-based enabled business software for a lot of these companies. They're really enabling that shift to work from home. And now they own Slack, okay, which is a huge platform for communications, for remote workers. So it just recently upped its 2021 sales estimate in August, really on precisely that, on the revenue that it's going to be making from Slack, from this cloud-enabled business software that's driving this remote work theme. And shares jumped 15% when they did that in August. So the news is out. It's an expensive stock, I realize, but anytime you can get a share or a company, a share of stock or stock in two of these themes that are just driving over the next 20 years, CRM's it. Salesforce is going to be there. Just out of curiosity, let's check out what's the market cap. So market cap is $200 billion on Salesforce. Next 10 years, it's going to be $1 trillion easily, no problem. Salesforce will hit $1 trillion market cap over the next 10 years, which is a five-fold return. Five-fold return on your money in 10 years. That's a pretty strong investment. The other one here that we're going to talk about for that remote work is the other 2020 darling is Zoom Communications, ticker ZM. And again, this one is one that just took off there, but has given back quite a bit since the October peak of 560. It's now down to 350. So about almost 40%, 37.5%, 37% lower from its peak there, which actually let's look at the price to sales here, because I bet this one isn't too bad of a value if you're considering the history for price to sales. So price to sales is still 51 times that multiple. Okay, it's traded as high as 100 back in October when it hit that peak, and as low as 40 times back in January. So back before we knew the remote work theme was going to really kick it into high gear this year, it was still trading for 40 times on a price to sales basis. So not cheap on any measure of valuation. But now it's still right around 51. So that's actually not a huge valuation premium above that, that multiple. So 50, it's about 25% more expensive than where it started last year at, which I mean is a pretty nice place to be. If you consider it could go up to 100 times if we get another lockdown situation, that kind of thing. And over the long term, sales are just going to increase much faster. This is only $100 billion company, and I can't believe I'm only saying 100. It's only $100 billion company, but $100 billion market cap. Enterprise value is right there, so it seems like they probably have a great balance sheet. They have $1.9 billion in cash against just $70 million in debt. So that is an amazing balance sheet, actually. I did not know that. So they've got a very strong balance sheet, a lot of cash there for that flexibility and survivability. And quarterly revenue growth, 366%. Quarterly revenue growth on a year-over-year basis. So let me tell you, even at 51 times on a price to sales basis, if it's growing revenue by 300, almost 400% a year, it's going to grow into that price. Okay, it's going to grow into that price very quickly. And I think Zoom is probably, even though it's got one of the higher price to sales ratios in the list here, I think it's one of the best values. Just on that on that revenue growth and the future for the company. So that's really the 10 stocks. That's the list that I want to put on my radar, build up a position now, and just be waiting for those pullbacks because they're going to be here. Now I want to open it up to Q&A.